Hello, everyone. I'll be with you shortly. Thanks for joining me this Sunday night in the States, Monday morning here in Asia. Appreciate you all being here, and I'll be with you again shortly. Let me know how the audio is coming in. I appreciate that as well. Hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, and once again, I'm glad that you all could be here. Really do appreciate that. Aloha, and welcome back. Quick roll call. I see Mutant Ref. How you doing? Catherine Weaver, first time I've seen your name. Welcome aboard. If you are new, please do go ahead, type in new and where you're from, and we'll see if we can go ahead and acknowledge you. Peter Frowine, same, never seen your name here before. Welcome aboard. Mark Ter. Uh, hmm, Good question. Straight off the right off the bat, should we all continue to stack physical gold, silver, and hodl BTC so that they cannot buy it as they manipulate spot prices? I say definitely buy physical gold and silver. Sometimes the manipulation's in your favor. If you feel there's manipulation, it's in your favor. You can get it at a bit of a cheaper price. And plus, we all saw what happened with Bitcoin last week. Pretty amazing stuff out there. But Mark Ter, welcome aboard. Jay, how you doing? James Richter, howdy. Good to have you back. Pablo Pina, aloha. How you doing? Jack P. Let's see, Mr. Nguyen, how are you doing? Um, Mitch Alex, first time I've seen your name as well. So welcome aboard. Just want to say a quick welcome again, one more time to everyone, and appreciate you supporting the channel and being with us through it all. Greg Gala, new one, Cleveland, Ohio. How you doing? Welcome aboard. And okay, so quite a bit of few names, so appreciate that. Richard, we are Sardri. Interesting name, Arizona. Welcome aboard. Okay, so we got a program today is mostly going to consist of if the U.S. dollar can survive as a world's reserve currency, and we do know that world reserve currencies they don't last forever, and so I think the question we're mostly looking at is, are we on that path where the U.S. is going to dissolve as a world's reserve currency? How far down that path are we, and what might we be looking at, if anything, to be the next world reserve currency? So, and we'll just be taking a quick look at it. So it'll be good to get your opinions on that as well. So, as always, if you are new, please do go ahead and subscribe, hit the bell to be notified on updates, and give us a thumbs up. We truly do appreciate the thumbs up. Probably the most important thing that you could do for us. And as always, you can find us on social media. Silverbullion.com.sg is our website. Yes, we do sell gold and silver, but more than that, we absolutely do specialize in wealth protection, systemic wealth protection. And a lot of you out there already know what's going on. So give us a call, send us an email if you have deep concerns about what's going on. Silver Bullion SG is where you can find us on Facebook. Silver Bullion PL is our Twitter handle, PL for Private Limited. For some of you who may be wondering, bit.ly, bit.ly, SBTV iTunes, and SBTV Spotify are where you can find just the audio versions. And Crisis Tracker, if you have that Telegram app, do join us on Crisis Tracker. This is where we go ahead. And as always, we will put news. Sorry, I might be clipping on you folks. As always, We will put news as it pertains to economics, finance, definitely gold and silver, things like that. And that group has been growing. I think we're getting up to about 500 or may have even passed 500 now. So it's a good group. Join us if you can at Crisis Tracker. Just get that Telegram group. I did have to adjust my audio. Looked like it was clipping. So let me know if it's coming in okay for you still. So again, just want to welcome everyone here. Seymour Rivers, the Mick. How you doing? Let's see. Doug Wilder. Okay. So a lot of you guys are here. Polynesian Pip again. Aloha. So just want to go ahead and take a look at our upcoming guest. And you guys are going to want to join us next week. Our upcoming guest is going to be Jim Rogers, best-selling author of books like Hot Commodities, Adventure Capitalist, Investment Biker, Street Smarts as well. And he is an investor extraordinaire. He is going to be back once again joining us. Graduate of both Oxford and Yale, Jim has deep concerns about the economy and where we are headed and what might we do in the volatile times coming up ahead. It's definitely time to saddle up and silver up for our upcoming guest, Jim Rogers. So I do hope you can make it to see this interview next week. So again, subscribe, hit that bell so we can notify you when the interview is going to be released. So again, looking at these roll call here. Uh, okay, thanks once again for joining us. And because of that, we do our weekly ebook thank you giveaway, and we're going to be giving away the book that we did last week because there seems to have been a pretty good response for it. When Money Destroys Nations, and it touches on Zimbabwe and what happened back in 2009 after years of rampant money printing, and it does give a pretty frightening example for what lies ahead or what's in store for countries that resort to printing money to pay national debts, bail out banks, and oligarchs and enrich political elites. Kind of sounds like kind of sounds like what's going on right now with the U.S. So it's a pretty interesting book. So we'll be giving it away again. If you did win it last week and you win it again this week, we'll give you an alternative prize. So the rules to this game: you want to download that Kindle app from your apps store, whether it's Google Play or whether it's the Apple Store, the iTunes Store. It is free, so go ahead and download it. Be one of the first five, or be in the top five, to go ahead and answer the question correctly on this live stream before the timer runs out. We're going to take the first five winners, I should say. U.S. winners, we're going to give you a link to that ebook. Winners outside the U.S., we're going to have to give you an alternative prize. As always, it's because Amazon or Kindle, anyway, they don't allow gifting ebooks outside of the U.S. So we'll have to work something out with you there. And you're going to have to provide us an email during this live stream. And what will happen is my colleague Vincent is standing by, and he will mute your comment, and then you can go ahead and send your email, and no one else will see it except for us. So that's how we'll work it out. So your email can still pretty much stay not confidential, but at least everyone here won't be able to see it. So having said all this, the question is going to come from last week's David Hunter interview. So if you had a chance to watch his interview, it's pretty good. There are some things that you may agree with, some things that you may not. I myself was in that same boat. Some things I agreed with, some things I didn't, but he is David Hunter. And the question is going to come from that interview. The question is, according to David Hunter, what exists between depressions? So according to David Hunter, what exists between depressions? So you're going to have about a minute and 20 seconds more to go ahead and answer this question. Just give it your best shot. Give it your best shot. You never know. You may actually go ahead and get it. Okay, so according to David Hunter from last week's interview, what exists between depressions? Okay, so go ahead and take a shot. Okay, so let's see what's out there. Jack P. Book is excellent. Great. Glad to hear the feedback from that. Uh, Mitch Alex, bull markets. Let's go ahead and take a guess. James Richter, super cycles. What else do we have out there? Greg Gala, bull. Seymour Rivers, cycle. Let's see what else is out there. Let me see. Bull market, Civil Warrior, recessions, bull market, bull markets, bull markets. Rice, I guess, as crisis. Bull. Let's see. Paul, super cycles. Peter Frowine, bull markets, bull markets. Okay, a lot of people think bull market. Carrie Ellen Wilder, how are you doing? Unrestricted manipulation. Mitch Alex, cheap commodities. Okay, so we'll keep it going. Mr. Nguyen, appreciation. Okay, tree climber. Okay, so time is up. The answer is super cycle. So we will take the winners up until Paul, and there were, I think, three or four of them. Actually, three. So we're looking at Paul. Paul said super cycles. We're looking at Mr. Ebook Seymour Rivers, who said cycle. And we're looking at James Richter, who said super cycle. So these are the three winners that made it in time. And if you did already win the book, we'll go ahead and we'll substitute it with perhaps another book. We'll work something out with you. So again, the winners are Paul, who said super cycles. The other winner is Seymour Rivers, who said cycle, close enough. And the other winner will be James Richter, who also said super cycle. So congratulations to you three. And what we'll do is we'll revisit that interview with David Hunter, and we'll go ahead and let you know that he did, in fact, exactly say that.
I believe super cycles exist between depressions. So the last depression was the 1930s. So let's say we started in, say, the early 1940s. And I believe the next depression is the 2030s. So, we're basically in the last decade before I think we hit that.
Okay, so as people tell me all the time, though, there is a time to make money and a time to protect what you made, part of these cycles, right? My belief, expand your safety net, expand stores of value and safe haven assets. Again, during these times of these peaks and valleys, you definitely want to have something that can hold you through it and store your wealth. So that was David Hunter saying that there are super cycles between depressions, and have to agree with him there. So let me see what is out here. Vincent has a message for you guys. Paul, Seymour Rivers, James Richters, congrats. Please put your emails in the chat if you want the ebook. So three of you out there, go ahead and Vincent will mute your comments and go ahead and send your email address to him. So two more clips from David Hunter in our guest revisit portion of the program.
The risks are growing for a lot of reasons. And on the other side of this is, as you say, something that I think is going to be the worst bear market in the post-World War II era, probably the worst downturn since 1929 crash and the depression that followed. I'm calling it a global deflationary bust from an economic standpoint, and a bear market that, as you say, could be 70-80% downside.
All right, so the worst bear market in post-World War II era, worst downturn since the 29 crash is coming, a global deflationary bust. And, I'm still not exactly on board with people who say deflationary. And we also hear the word disinflation. I tend to think that it's going to be inflation. So what do you folks think between those three, deflation, disinflation, or inflation? Which do you think it's going to be? And if you don't mind letting us know why, do you think it's going to be the one that you saw? Inflation, disinflation, or deflation? I'm saying inflation. So moving on, we'll play another clip, and I'll be looking for your answers. Looking for your answers out there to see what you say. Inflation, disinflation, or deflation?
I'm a big bull on both gold and silver. I think near term, with inflation, starting to break out, with the dollar weak, with interest rates about to rally again, I think you're probably going to see the next couple months a pretty strong silver and gold market. I have a target of 2,500 for this year for gold, 45 to 50 for silver. I think you could see that, certainly by the end of the summer.
Okay, 2,500 gold and $50 silver by the end of the summer. What do you think? So I'm looking at the your comments here. I do see quite a number of inflationary bust, inflation because of the money printing, inflation under the current U.S. administration. Marcus Harris, disinflation. I hear some guys saying disinflation. To one of the guys at work, Thomas, if you're out there, he believes also disinflation. So okay, good on you, good on you. Disinflation. Let's see what else is out there. Seymour Rivers inflation due to supply restrictions, shortages can be, can very well be. So I do see more inflation than any other out there. I also see inflation as well. So we'll see what happens. Either way, I think none of them are really going to be anything to smile about, but we'll see what happens. So anyway, I do hope you enjoyed that interview with David Hunter. And what we'll do now is we'll move over to our website, silverbullion.com.sg, and we'll go ahead and take a look at the gold and silver price and see what's going on with that. Um, Let me get to U.S. dollars. In U.S. dollars, we're seeing silver at 27.71. It's making a move upward again. Let me come back and center this for you. Give me a couple seconds here to get this right. Okay. Okay, sorry about that. So US dollar 27.71, gold 18.60. So gold is slightly moving up as well, and we talked about how important that 18.50 price point is. So gold is managing to stay above that 18.50 price point. Nickel back over 17,000. It dipped below 17,000 just a little last week. Back up again over that $17,000 per ton range. Again, nickel is used in electric vehicle batteries. It's probably the key component in electric vehicle batteries, and this is why we're really starting to see heavy demand on nickel. Investor Kit, go ahead, click on this, and you can either look at it on our website or you can download it. It is free, and there's a lot of good info in there. So go ahead and click on that Investor Kit and do sign up for storage. It is free. It doesn't cost anything to maintain. So you definitely want to have this ready to go. We always talk about options, and you will surely want to have options out there. Gold silver ratio looking at 68.1. So still it seems to be, ranging between 67 and 69. Right now it's still out there at 68. Again, right now, it means 68 ounces of silver would equal 1 ounce of gold price wise. So that's what it means. Um, and again, taking a look at some of the products, LBMA bars, this is always, as I say, a hot topic. People do feel there's a shortage in LBMA bars. So we'll go ahead and take a look at that, see where we are at. We have 188 in inventory. It's moved quite a bit. We were above 300. It's come down to 188. So there is a pretty good demand for LBMA bars, and these they they are 1,000 ounces. But typically, what happens is they are usually stated as 1,000 ounces, but a lot of times they do not weigh exactly 1,000 ounces. So this is always something to check on with your dealer is, what is the exact weight? Because there are times it doesn't exactly weigh 1,000 ounces, but you can go ahead and purchase this and own it. You will own it, and you can go ahead and store it in the vault if you want. And again, to do that, you will have to sign up as a Silver Bullion user, and all you do is click on sign up here. And then there are 6 different accounts: personal, joint, trust, joint with a minor, business, and retirement account for you folks who want to get more info on your precious metals IRA. And again, the easiest one is personal and joint. These two, all you really need is just your ID, your passport perhaps, and filling out an application. Very simple, basic information. And when you come down to the bottom, references, how did you find out about us? Go ahead and tick Silver Bullion SBTV, and this is pretty important for us. Go ahead and tick that, and you'll also want to check receiving customer notifications via encrypted secure notification. What that means basically is if you get an email from us, it'll just say email from Silver Bullion, or notification or something like that, and the content won't be in the body of that email. So this way, whatever communications you have, Google, Yahoo, any of those guys, they don't or they can't see it. So you communicate directly with us through an encrypted secure notification. And that's pretty important considering the times that we are in today. Moving on to Twitter, see what's going on out there. Well, this is for me actually. Congrats to Phil, a win for the old guys. Phil Mickelson doing it, winning the PGA Championship. Congrats to him. Yuan talks. China's digital yuan was not developed to replace the dominant status of the US dollar, but to meet the needs of the internet era, especially for retailing payment. Said, I'm not even going to try to pronounce it, former head of the PBOC at a forum on Saturday. So what they're saying is this was not made to replace the dollar, but it was made because of the way we're moving on the internet and having a payment system to be able to use with the internet. And this kind of leads into what we're going to be talking about, which is can the US dollar survive as the world's reserve currency? Looking at velocity of money, we're seeing that it just really continues to fall off a cliff. It did have an uptick here, and then it kind of went back down just a little again there. The interesting thing, though, is when you look at the money printing, the M2 money stock, especially the end, you can see how it just pretty much goes straight up. And here it just goes straight down. So they're kind of inverted right now. And for some reason, I was thinking about it this morning. And if you are eating as fast as you can, but more and more food just keeps coming to your table, your velocity or ratio of consuming and eating goes goes down relative to the food that keeps coming. Your velocity of food goes down. So I thought about that. I said, hey, wait, this kind of makes sense because if they're printing more and more money, you only can spend as much as your employer gives you in your salary, right? So you're never going to be able to keep up with that velocity of money that's being printed. So it kind of makes sense here where, maybe the velocity of money is not so much as good of a metric as it once was because there's just too much food on the table and you can't eat it quick enough. So, I mean, I was just kind of looking at it this morning. I said, hey, wait a minute, there could be something to this. Anyway, the end of paper, gold, and silver markets, unless the BIS has an ulterior motive to trigger a chaotic financial reset of some sort. It is a case of regulators not understanding and we'll move forward here to zero hedge. Going to have to close down some of these ads. Okay, so it actually starts from down here, I believe. Unless the BIS has an ulterior motive to trigger a chaotic financial reset of some sort, it is a case of regulators not understanding the market consequences of their actions. And it's the same thing like perhaps all the money printing in QE, where all these unintended consequences are going to pop up. So just to read a couple paragraphs here. So last week I explained why, as they stand, the new Basel III regulations will make it uneconomic for banks to continue to run bullion trading desks. The introduction of the Net Stable Funding Requirement, or NSFR, means that mainland European banks, of which 10 are LBMA members, including the Swiss, will have to comply with the new regulations from the end of June, and all UK banks, in effect, the entire banking membership of the LBMA, will have to comply by the year end. There are 43 LBMA members listed as banks, and on the COMEX, there are currently 17 with long and 27 with short positions in the swaps category, which represent bullion bank trading desks in the dominant futures contracts. So, being similar, the COMEX numbers must broadly replicate these operating in London. It's therefore reasonable to assume that if the LBMA's banking membership ceases dealings in unallocated bullion, then very few will continue to deal on COMEX. So this is something that we're going to have to watch and something that we're definitely going to look forward to. Dave Kranzler, Fed RRPs or reverse repos. This is making some noise now. We've been watching it for a while. It's starting to get some chatter. So Fed reverse repos rose yet again today. 369 billion and 52 counterparties. I have an idea of what is going on, and it's not a taper warm up. Dave, what's going on, Dave? Maybe we'll try and get him on and talk to him about this reverse repo situation. Um, this guy here explains it pretty well on Reddit, but it's just that it's quite long. So if you have the time, go ahead and look at reddit.com. And it's a post in Wall Street Silver. What's going on in the reverse repo market? So if you have time, go ahead and click on this or go to that website and watch the video. It's a little bit long, so I can't really play it here. It would take up too much time. Dave Kranzler again, pretty amazing coming from the CEO of a company that is complicit in the bank effort to cap the price of gold. Hey, Mark, how about you withhold 50% of your production and wait for higher prices to sell it? This is in reference to Barrick Gold CEO Mark Bristow dismissed cryptocurrencies as a superior store of value than gold. So Kranzler, very, very active as always on Twitter. Um, Tom Woodland, and this is true here, what a lot of people are talking about. Sorry, but something that can drop over 30% in a day and can crash based on someone's tweet is not a store of value. And this is the argument really, really starting to come out nowadays. And then we had Janet Yellen, U.S. Treasury Secretary, calls for stricter cryptocurrency compliance with IRS. I do believe, yeah, here it is, 10,000. Uh, if you, let's say, use your cryptocurrency and you go ahead and use it to purchase something, if it's more than 10,000, you are going to be reported to the IRS. And that's how I understand it. Let me just take a quick look. Treasury Department announced that it will require any transfer worth 10,000 or more to be reported to the IRS. Cryptocurrency already poses a significant detection problem by facilitating illegal activity broadly, including tax evasion. So again, the narrative on cryptocurrency continues by the Treasury, where they are looking at it as tax evasion, a tool for tax evasion. They're looking at it as a tool for illegal activity. The narrative is consistent with what the Treasury is saying. So keep an eye on this as well. And investors have seen the value of Bitcoin slide about 25% over the past month, and talk of capitulation creep into online forums. So again, regulations, regulations, and I guess we'll probably talk to Jim Rogers about this as well. Daniel DiMartino Booth, the data and the evidence are clear. The proposed tax increases would greatly disadvantage U.S. businesses and harm American workers. And this is where Yellen, she wants businesses to pay a bit more in taxes to go ahead and help out with the Biden infrastructure plan. And we all know what happens when you start taxing or regulating businesses too much; they will move away. And so this is where Daniel DiMartino Booth is saying it'll disadvantage the businesses and harm American workers. So I guess we'll end it there with Twitter. So that pretty much was what's going on with Twitter. Let me get back to you guys and see what's going on out here. Um, let's take a scroll through the comments here. Let's see. Yeah, VK Travelog, appreciate that. I store my PMs in the safe house so Patrick can keep on. Hey, I do. You know, I do. I do. So it's safe. It's definitely safe. I appreciate that. The safe house is our precious metals vault here in Singapore. So again, appreciate you trusting us with it, and we do watch it like a hawk. That's a guarantee there. Let me see what else is out here. Um, okay, the heavy. I noticed people are argumenting for deflation. Get the definition wrong and talk about prices and not about the money supply. Money supply is, I tell you what, man, it's just really incredible right now. The money that's being printed. There is going to be a consequence. Make no mistake, there is going to be a consequence to it at some point, and it just might be where, the path that the U.S. dollar is on, where it loses reserve currency status. It just may speed up. Who knows? The way things are going. A few more comments out here. Yeah. Weimar, Germany. Yes. Let me see. Okay. Jason Kincaid, how true that is shrinkflation, right? I think we all see that as well. I- Next time you go to the grocery, if you can, or if you do remember, you look at the weight of some things. The weight is the packaging is the same, the product looks the same, but you're getting less product in it. It can be a simple thing as a roll of paper towels. You know, maybe there were 150 sheets before, and now there's only 140 sheets. Or it can be a bag of chips. You know, same size bag, but you open the thing and there's more air than chips. So, you know, it is shrinkflation is it's definitely a real thing out there. So moving on, all of this takes us to the topic of the day, which is can the USD maintain its global reserve currency status considering all that's going on? So last week I played this clip. I'm going to play two of them from last week where Stan Druckenmiller had some things to say, but I'm going to play this clip where more and more voices are actually coming out and saying the US dollar may lose its world reserve currency status. So we're going to start with Druckenmiller and go back to what he had said.
Let's talk about the dollar. And 85% of the transactions are still done in the dollar. You pointed out in a recent speech that you think we've crossed the Rubicon. Are you comfortable saying what you said there, that for the first time in your career, you think we lose reserve status at some point?
I'm comfortable with it. That's my central case. As you know, Joe, I can change my mind. But yeah, you said that to some extent, the Fed is enabling the fiscal transfers. It's not to some extent. They couldn't be doing this without the Fed. The Fed is monetizing their activity. I mentioned all the QE after vaccine confirmation and retail sales. We've had 850 billion of direct transfers, 575 billion of them came after retail sales were above trend. 575 of the 850 billion. I'm old enough to remember the bond market vigilantes. I used to be one of them. Without the Fed buying, I don't know what the exact number is. I think it's 60% of all the debt issued. The bond markets would be totally rejecting this. So they are enabling this massive expansion in fiscal policy. And the problem is, if you end up getting inflation, and frankly, even if you don't, the debt is going to be so big. You remember I did my entitlement talks 8 or 9 years ago. That's all happened except for one thing, the interest rate level. So we're right now in the crux of when the baby boomers accelerate in terms of getting Medicare, Medicaid, Social Security, that stuff. Right as we're doing that, we just put 6 trillion of new debt on. Again, all enabled by the Fed. These guys could not be doing it. Bond rates would go to a prohibitive level.
Okay, so that was Stan Druckenmiller. I think he said this about a week and a half, 2 weeks ago, and we played some of these clips last week. But as mentioned, more and more people were coming out and saying the same thing about concerns of the U.S. dollar as the world's reserve currency and keeping that status. Another one who came out and had something to say was Ray Dalio.
Is there a real threat right now to the U.S. dollar's status as the world's reserve currency?
Yes, there is a threat. It's an evolutionary type of process. There's not yet a good alternative in the form of a currency per se, but people are not investors, big, large institutional investors, don't run out necessarily to alternative currency because the three major reserve currencies all have the same basic problem. That's why they move into a new storehold of wealth. And you see that the storehold of wealth, like in 1933 reaction, is equities, is gold, is other asset classes that go up. So when you buy a company and you have low returns on your bonds and so on, that is that kind of movement. But the same is true for gold and other asset classes. If that gets too far, and it's standing the risk of, it's very dangerous. It looks like a currency defense. In other words, if those who are holding bonds, which are a lot, choose to sell the bonds because they're not providing a good return, and they're not, and because there's so much debt production and debt monetization, that puts the Federal Reserve or other central banks in the very difficult position of operating like a currency defense. Mechanistically, as money leaves that debt, that means either interest rates would rise, which would be terrible for the economy and markets, or they're forced to buy more and more. And that is how a spiral could occur.
Okay, so Dalio says the rise and fall of reserve currencies are an evolutionary process, and he's right there because they do indeed rise and fall and then eventually disappear as world reserve currencies. The three major reserve currencies all have the same problem, and that is true there. I mean, when you just consider all the money printing going on, and these problems will cause people to move into stores of wealth like gold, and that is very, very much so true as well. So if people holding bonds right now choose to sell the bonds, as Dalio mentioned, because they're not getting a good return uh, on, excuse me, because they're not getting a good return because of debt monetization, it puts central banks in a very, very difficult position of operating like a currency defense, as he called it. A downward spiral could occur. So again, those coming from Ray Dalio, and I just want to scoot down here and get to one of the comments. A lot of comments coming on. Appreciate that. Um, Hang on, so let me scoot down here. Okay, Nicholas Nasty, again, thank you for that. Appreciate that super chat. The money printer is the source of the misery and corruption. Without it, they could never afford their bribes and wars. We must break the money printer. That's true, and that's at least one half of it. The other thing we have to break is the corruption of politicians, where they're just not fiscally responsible, and that allows the money printing. If not, that is what is pushing the money printing to go on. So, but definitely, I appreciate your comment there and appreciate the super chat. Thank you very much for it. So, the question, really is, will the USD lose its reserve status? So, let me go ahead and make this a bit larger so you can see it, or so I can see it. We're often asked, this is coming from Schwab.com, so a financial organization, of course. So, will the US dollar reserve, or will the US dollar lose its reserve status? Sorry about that. So, we're often asked if the US dollar will lose its status as the world's reserve currency. Investors are concerned that the Federal Reserve's easy monetary policy, combined with rising budget deficits, will undermine confidence in the dollar. And we know money is all about confidence. The recent drop in the dollar over the past year has heightened these concerns. While we agree that there can be unforeseen consequences from the current policy mix, we believe the dollar's role as the dominant global currency looks secure. So, okay, coming from a financial institution. Let's take a look at another article. Let me make this larger again so we can see it. Okay, let me just close some ads here. Quite a bit of ads. The pandemic, the political fight raises the question: could the dollar lose its global status? So, in the most uncertain era of our lives, there are still a few sure things: death and taxes, and the dollar status as the world's reserve currency. So, on second thought, you might want to strike the last one. The greenback's prominence in foreign exchange markets is being questioned for the first time in recent history as the pandemic blows up the national debt, and the U.S. response to the crisis falls short of actions taken in other countries. Investors, in turn, have been moving money out of dollars and into gold, weakening the U.S. currency. And again, I totally agree with this. It is what we're seeing. And along with this, today we're hearing more and more people saying the pandemic is winding down of sorts. And of course, this depends on where you live as well. And therefore, the Fed needs to be tightening up. And so we're going to play a few clips from Danielle DiMartino Booth in an interview she had on Kitco. And I tell you what, she said some pretty strong things out here.
Fed's insistence on holding interest rates down and buying trillions in bonds, even though the economy is recovering and markets are thriving, could actually end up threatening the long-term health of the US dollar. He says the Fed was correct in its initial response to the pandemic, but that it is now using emergency measures after the emergency has passed and is effectively underwriting the spending binge in Congress, and that this could dethrone the dollar in the next 15 years or so. So do you agree that the dollar is in danger of losing its status as the global reserve currency?
Well, I certainly think that if Federal Reserve officials aren't a little bit more honest with themselves, I mean, this is the time to take a good hard look in the mirror and understand that they're facilitating the monetization of debt. It might not be directly. The Fed's liabilities are not legal tender, but because they're keeping interest rates at artificially low levels, because they won't even pull back on mortgage-backed securities purchases, when you see home prices rising at a record pace, the evidence is abundant that the Fed should have long ago stepped away from these emergency type of policies, especially given the fact that they have allowed fiscal policy to over exceed where its bounds should have been in terms of addressing the vestiges of the pandemic, especially when you look at resources. I follow a USA Today map that comes out every day that shows the number of states with rising case counts. Yeah, that was upwards of 35, 40 states a matter of 2 months ago. We're at 6. So we are no longer in an emergency situation. And if the Fed is going to insist on being an ostrich and sticking its head in the sand while it's pumping out $120 billion per month of quantitative easing as if we were in a depression, then yes, I see every reason for China to continue playing its very long game with the intention of eventually unseating the US dollar. It was in the aftermath of World War I in Great Britain. The debts that had been run up were so unsustainable that British pound sterling started to weaken appreciably. And then World War II came along. That was the coup de grace. That was when the dollar rose. But it was a 100-year process, give or take, compared to where we are today. And it tends to be the typical life of a reserve currency.
Okay, so let's take a brief look at a world reserve currency. And man, I was searching for comments to put up over there, so I could get back to more cleaner thoughts. I saw these comments. You guys out there, you guys are nuts. Anyway, this time it's different. So a brief history of global trade or reserve currencies, historic global trade currencies. So let's start here. The silver drachma, issued by ancient Athens in the 5th century BC, was most likely the first currency that was widely circulated. And then we have the gold aureus and silver denarius coins issued by Rome were the next, and they were the dominant currencies from the 1st century BC to the 4th AD. Inflation caused major devaluation of the Roman-issued currencies, causing them to become increasingly less accepted, making way for the Byzantine Empire's gold solidus coin to become the dominant currency in international trade from the 5th to 6th century. Then we saw the Arabian dinar replace the solidus as the global trade currency between the 7th and 10th century. And then we saw Florence issue the fiorino, which became the dominant trade currency until the 15th century. And these are the more modern trade or reserve currencies. We saw Portugal having it from 1450 to 1530, some 80 years. And then we saw various currencies of Spain from 1530 to 1641, some 111 years. Then we saw the Dutch, 1642 to 1720, roughly 80 years. And France, 1720 to 1815, some 95 years. And then we saw the UK pound, 1815 to 1920. And here we are today, US dollar, 1920 until today. Now, some people say it did start in 44. So I'll just go through this real quick here. Post World War I, the US dollar became the key trade currency as the US economy played a key role in world trade. Bretton Woods system in 1944 established a currency regime where the US dollar became the principal reserve currency, directly pegged to the price of gold. As a result of that, many currencies were linked to the dollar, and I will add, which meant they were linked to gold. Currencies were as good as gold. In the 70s, U.S. President Nixon released the dollar from its peg, creating the floating currency market that exists today. So putting it on a chart, The history of reserve currencies, again, Portugal 80 years, Spain 110, Netherlands 80, France 95 years, UK 105 years, US, well, some 77 years. I guess they're going from 1944. But what's interesting is in this chart that I found, I wish I remember where I pulled it from. The currency on the top above the US, a world global reserve currency, is depicted as the next global reserve currency. And that's what they're looking at, some type of a world global reserve currency. So getting back to the Fed and what Danielle DiMartino Booth had to say, is the Fed creating a far worse problem than the pandemic ever was? And has the keeper of the US dollar put the dollar in such peril with overprinting, bond purchasing, monetizing debt, and so forth? Going to end up with inflation. We can go on, but have they put the dollar in a very, very grave position now? And the keeper of the dollars, that being the government and the Fed itself. Let's take a look at another clip from Danielle and keep the comments going so I have something to cover up just in case.
And the IMF, the International Monetary Fund, recently reported that central banks around the world are reducing their US dollar reserves. During the fourth quarter of 2020, the share of US dollar reserves held by central banks fell to 59%. That is the lowest level in 25 years. So we're seeing this shift away from the dollar. Can it be reversed at this point?
Oh gosh, it's such a difficult question to even begin to address because Jay Powell, when he first started at the Federal Reserve, was probably the most rational and independent thinker since Paul Volcker was in the building. And he made an attempt at normalizing interest rates. He made an attempt at shrinking the balance sheets. And really the stock market and the corporate debt market, they both fell out of bed. So that's the problem with the Fed's policies, and the fact that they insist on perpetuating this policy going forward is that they're inflating the bubble that is in risky asset prices more and more every day, with their refusal to even stop, look back and say, you know what, maybe the Treasury purchases are appropriate, but we certainly shouldn't be pumping up the housing market given the damage that's being done to those who cannot find affordable housing. And the Fed is in theory supposed to make interest, supposed to make monetary policy in the public interest. That's on their website. So it is time for some rationale to enter into the discussion. But I think Jay Powell is so traumatized from his attempt at normalizing monetary policy that he may just want to take the next 8 months and get out the door.
Okay. Yeah, when am I going on? I got to get this live stream straight first before I can even think of a high production number like that. But I think we do pretty good anyway. Well, not only is the U.S. dollar in peril where it may be on the road to losing reserve currency status, perhaps the Fed chairman has given up. I mean, Danielle laid out a very, very interesting point there. Perhaps the Fed chairman has given up as well. What do you guys think? Do you think Jay Powell has given up? Is Janet Yellen there, or perhaps was she installed as Treasury Secretary to lend support to Jay Powell? And if you guys watched last week's live stream, you saw what Danielle DiMartino Booth had to say about Janet Yellen and her trustworthiness. So, pretty interesting point she laid out. You know, has Powell actually given up? Who knows? So the reason on many an interview, this is the reason I ask if the Fed has another Paul Volcker in the building, or if they have anyone who would have the courage to do what he did. And as Danielle DiMartino Booth said, Powell tried and failed. And he just might be too traumatized, her word, traumatized, to get back on the horse. So I guess no saddle up and silver up for Jay Powell, is there? But that's a very interesting point that she did lay out there. And I want to go take a look at this article here where the risks are rising that the dollar could lose its special global standing. This was from 2019, CNBC. So again, you know, this talk is nothing new. It's been around for a while. There are a number of factors suggesting that over time, the U.S. dollar may be at risk of surrendering its position as the world's global reserve currency, argues Fitch Ratings analyst James McCormack. economic sanctions and protectionist trade initiatives are two of the leading causes. So this was pre-pandemic, so they're not even counting the stimulus and everything else that is added on top of this. China and the Eurozone have been actively touting their currencies as reserve and transaction substitutes. So let's go ahead and take a look at this. Even exorbitant privileges can be lost, and there are a number of factors suggesting that over time the US dollar may be at risk of surrendering its lead, if not its role, as the world's preeminent reserve currency. Some of these factors relate to US policy decisions, others to policy decisions and developments elsewhere, but all point in the same direction. The primary reason for the dollar's continued dominance are inertia and the lack of viable alternatives, neither of which U.S. policymakers should find confronting for the longer term. And I just want to go down to one other part here, if I can find it real quick. Okay. And here's the other part to it. A number of European officials have talked up the role of the euro, with European Commission President Jean-Claude Juncker telling the European Parliament back in 2018, his annual program address, that it is absurd, his word, absurd that 80% of European energy imports are settled in dollars. France, Germany, the UK, they set up the instrument in support of trade exchanges, otherwise known as INSTEX. And you guys know I've mentioned this before. They've set it up as a workaround to U.S. sanctions on Iran. And while it may be more politically symbolic than economically effective, INSTEX confirms that even allies will seek dollar alternatives if policy differences with the U.S. cannot be bridged. So INSTEX, it's an alternative to the U.S. SWIFT system. Got to keep an eye on it. And when it comes to treasuries, as that article mentioned, here's something else that Druckenmiller had to say in the interview that we showed last week.
Can we go to the chart on the dollar specifically? Because I think this is really important. Last spring, in the midst of an equity market meltdown, and I've been trading for 40 years and I've never seen anything like this. Right in the middle of an equity market meltdown, the bond market went down 18 points one day. And everybody thought it was macro traders like me and others that were rejecting the implications of the CARES Act. The Fed did a deep dive, and by hindsight, foreigners sold $1 trillion of treasuries overnight as we were proposing the CARES Act. They've continued to sell treasuries ever since then. Why is that important? Because for 20 years, treasuries have been the go-to asset of foreigners to hedge global portfolios with. In every case, whenever you had a problem in the equity market or in the world economy, they fled to treasuries and they fled to the dollar. Last spring, that was violated. So since then, they've continued to sell treasuries. So what we've gone from is for 20 years, an average flow of $500 billion a year into treasuries from an outflow out of treasuries. So when you have a $700 billion current account deficit, our estimate for the year, you need capital to flow in to offset that. If you just erase 500 billion inflow and turn it into an outflow, you see the pressure will put on the dollar. A reasonable person might ask, well, if that's true, why did the dollar not go down from March to July? Very simple. Who was the biggest beneficiary of COVID? Obviously, the massive digital transformation companies, Google, Microsoft, not so massive, but Zoom, those kind of names. What country dominated in terms of those names? The United States of America. So the $500 billion outflow out of bonds was offset by a massive inflow from world central banks, from sovereign wealth funds into our equity market. By July, that had become pretty much in the market. The relative prices had gone up. And frankly, the vaccine profile was starting to look better. So that is when the dollar peaked, as that offset started to diminish. And as you know, Joe, the vaccine tends to cause a rotation out of growth stocks into value stocks. Our big advantage over here are the growth stocks. So that's why I think the pressure on the dollar is going to continue.
Okay, pressure on the dollar will continue. So yes, the world is moving away from the US dollar to slow process for a currency to lose world reserve currency status. But guys, it's begun. It's begun. We're already on that path. So what's the alternative? Well, how about a basket of currencies as opposed to just one? And I know straight away, basket of currencies makes people think of SDRs. Well, how about something else? This is from Wikipedia, World Reserve Currency. Let me go down a bit. Um, okay, let me just make this a bit larger. Single world currency. An alternative definition of a world or global currency refers to a hypothetical single global currency or super currency as the proposed TERA or DEY, acronym for dollar, euro, yen, produced and supported by a central bank, which is used for all transactions around the world, regardless of the nationality of the entities, individuals, corporations, governments, and other organizations involved in the transaction. No such official currency currently exists. One more paragraph here. Advocates, notably Keynes, of a global currency often argue that such a currency would not suffer from inflation. Okay, would not suffer from inflation. Mr. Go ahead and print all the money you want, but it would not suffer from inflation with a global currency. Okay, which in extreme cases has had disastrous effects for economies. In addition, many argue that a single global currency would make conducting international business more efficient and would encourage foreign direct investment. Okay, would encourage foreign direct investment. A world's reserve currency, a one world currency. Now, this is the whole topic that could be used for another day. But aside from that, there's also the belief that China's ambition and success to be a global economic power will naturally lead it to be the next world reserve currency. So here's another clip from Danielle DiMartino Booth talking about that.
In the worst case scenario, though, Danielle, what would replace the dollar?
I can't see it being replaced by anything else but the yuan, which would explain why they're trying as aggressively and as rapidly as they are. That they've just announced that if you go to check out on Ant, that you'll be able to choose digital yuan and when you're in your shopping basket. So they are trying to roll out a digital currency of their own. They're not saying they're going to use it to displace the dollar, but they have a bigger propaganda machine than we do, and they're never going to come out and say anything that forthrightly. I'm not of the opinion that it is going to be a cryptocurrency, because that assumption is underlined by the notion that China, which has made no bones about it, they want to be the largest economy in the world. China has been very forthright in broadcasting their intentions, and typically when you are the world's largest economy, you do hold reserve currency status.
Okay, so will the yuan be the next global reserve currency? So here's an article from it. An article about it back in late 2020, November 30th, 2020, from thebalance.com. China wants its currency, the yuan, to replace the US dollar as the world's global currency. That would give it more control over its economy. And I just want to add here, you got to ask the question, if you're a nation on the rise, your economy is on the rise, how do you operate with someone else's reserve currency? It's rather difficult to do. You would practically need a different reserve currency from an economy that is failing to an economy that's going on the rise. So there will have to be some type of a shift here. Anyway, nonetheless, as China's economic might grows, it's taking steps to make that happen. A slim majority of institutional investors see it as an inevitable, but don't say when. Could we see a switch from a greenback to what they call a redback dominated world? If so, how and when would that happen? Some key takeaways. And this is pretty interesting. China is working hard to make the yuan the next global currency, although presently a reserve currency. The yuan can't upstage the US dollar unless the following scenarios happen. central banks around the world choose to keep a total assets of at least 700 billion worth of yuan in foreign exchange reserves. The PBOC allows free trade of the yuan and relaxes its peg to the US dollar. This is up to China. The PBOC becomes straightforward about its future intentions with the yuan. This is up to China. China's financial markets turn transparent. This is up to China. Chinese monetary policies are perceived as stable. Again, this is up to China. The yuan acquires the US dollar's reputation of stability, which is backed by the enormity and liquidity of US treasuries. Again, this is up to China. So when you look at all of these things, it is all entirely up to China to go ahead and possibly make it happen. So I found this pretty interesting that all of these key points pretty much all say it's up to China. So if this switch does happen, well, what can you do? What can you do if the US dollar loses reserve currency status? And the pretty simple answer, we can go down a bit, and we're going to see the answer here. What can you do? Buy precious metals. And this is not from a precious metals website, it's therecenter.com. So initially in 41, when the Bretton Woods Agreement was created, the US dollar was fixed to gold. A lot of us here already know that. Adjusted for inflation, that same ounce will be worth 498 in today's dollars. This article is a little bit older here. Since gold was removed as the backing for the US dollar in 71, the total number of US dollars has grown without any checks and balances. And this is part of the problem. And there are some people who are reacting. In a quick survey, 10.8% of the U.S. population owns gold, while 11.6% owns silver. So you can see that this was in September of 2020, about a tenth of the population has gold and has silver. And surprisingly, or actually not surprisingly, there are actually more people who do own silver. There wasn't really much in this article here. It's just the overall statistic that I wanted to show here. So there you go. More reasons than ever to be holding silver and gold, especially if you are in USD. I'm not a Forex guy. I'm not a Forex expert. But if I'm holding any fiat, I know all fiat does have an expiration date. And I think we all know that fiat has an expiration date. I don't want to be holding it at that time, and neither do you. We don't want to be holding it at that time when these changes really start to move quickly and come about. But if you're in India, I just wanted to add this in. If you're in India, don't hold too much of that stuff. Don't be holding too much gold and well, especially gold. Reason why, and I found this pretty interesting here. It does pertain to India. So I'm not sure if this authority, but the prescribed quantity of gold considered allowable in India. Gold within this limit will not be seized even at the time of search at the assessee's premises. So they may be coming around looking for it. A married woman can have up to 500 grams of gold. An unmarried woman can have up to 250 grams of gold. A man can have up to 100 grams of gold. And even if a higher quantity of gold may be left unseized based on the assessing officer's discretion. A lot of room here for discretion to be applied. Factors such as family customs and traditions can be considered for such a decision. It is important to note that the limits prescribed above apply only to jewelry held by members of the family. In case of jewelry found belonging to any other person, the same can be seized and confiscated. It's pretty interesting. If you're in India, make sure you get some bullion along with the jewelry. I know jewelry is an important part of the custom there, but that was pretty interesting to see there. And so that is pretty much the topic of the day. Let me run through some of your comments here, see what I can find. Ron Shekosen, bury the gold. That's what some people actually do there. Let's see. Okay, looking at a few more comments. Let's see. MX Old Timer, they are making it up as they go. You kind of got that impression, right? I mean, it seems like it's really up to the discretion of the assessing officer. So, yeah, that one, well, it's just make sure you get some bullion along with that jewelry. That's all I can say. So let's see what else is out here. Um, okay, yeah, Sarah Brown, confiscation of jewelry. That's cold. Well, you just never know where the world is headed. I tell you, governments are they're going to be taxing us one way or another. That's for sure. That is for sure. Okay, so that pretty much will wrap up the topic of the day, and we'll just move over into commentary. The Fed has made the cure worse than the cold. I think we could all pretty much be in agreement there. And from the looks of it, the U.S. dollar is now confirmed. It's now confirmed to be on the path of losing world reserve status. You're hearing more and more guys who are willing to come out and say this. Some guys even in the financial sector. So that's a pretty telling sign right there. And I did search. I have searched high and low as to see what really happens. Or what does it mean for you and me or people holding U.S. dollars, the way we live? What is it going to mean to the debt we hold in U.S. dollars? And I could not find one conclusive answer. So that means no one knows for sure. No one knows for sure what will happen when a reserve currency this large, this deep fails. And we could speculate, but the fact is, change is coming. Change is coming. It always does. The central bank digital currencies, crypto, whatever the new world's reserve currency might be, that's one thing. Okay. And that's one thing we can't control. The more important thing, the thing that we can control is how do we get from today's world reserve currency to the next, meaning from here to there, meaning from this um, monetary system to the next monetary system. And we talk about this from time to time. How do we get from here to there? Well, we need a store of value. We need a store of value to get from here to there. And that store of value to me, it is gold and silver. Whatever they want to come up with, it's up to them. I have no control, but I do have control of how I can take whatever financial assets, money, currency, however, whatever you want to call it, a way to take it from here to there to get through that transition that is going to come. Gold is a neutral asset, something that major nations hold in reserves. It was the base for all currencies. The way we are going, if the world wants monetary neutrality again, it's going to want gold. And I did see one of you folks put that comment up there. So that'll end the commentary portion. I'll take a look at a few more comments from you guys and see what's out there. Um, Rod Panhard, better get used to a much lower standard of living. I think that part, yeah, almost everyone would be in agreement as well if that U.S. dollar loses reserve currency status, and if you are in the U.S. Uh, standard of living, I can see that definitely lowering as well. Um, let's see, Tiger Roll. I wonder if it could drop 70% in days or months. Tell you what, that's a good question. Uh, I can't really answer, but again, this is why I say we need to have something to get us from here to there. If you're holding U.S. dollars, you have all this currency, and like you say, could it drop 70% in a short time? I don't know, but if it does, it's good to have your money in a different vehicle that if the fiat does go down, that vehicle that you switched it into, something like gold and silver, some other store of wealth, will help to maintain the value of your currency. Nobody knows when it's going to happen. Nobody knows how much of a percentage drop it might be. No one knows. So, you know, like I say, there's a time to make money and there's a time to protect what you made. And I'm hearing more guys telling me it's time to protect what you made. So that's a good point there. Let me see what else is out there. Let's see. Communist Party in Venezuela picked the dollar because the people trust only in the dollar. That is a great point. Because if I can expand on that, if you are holding US dollars, if you're in the US, what currency are you going to trust? For Venezuela, they trust the dollar. If you're in the US and it's a dollar that's in trouble, what do you trust? What what are you going to trust? What other currency are you going to try and move quickly into? Because if that USD goes down, it may take other currencies as well, where there is just no trust in fiat. So again, another reason why you want to have a store of value when it comes to fiat. So I understand your point. It's a great point. Just wanted to expand on that a bit. Um, let's see, Mutant Ref. Yeah, if you're on a fixed income, you may see yourself in a bit of trouble there. That's for sure. fat vegan. That's why I personally know a farmer. The farmers are going to be important. I mean, if you know trade, if you can grow food, you got that green thumb. The green thumb might be more important than a green back, when that situation comes down to it. So a lot of great comments there. I appreciate it. It's a little bit past the hour, and again, I appreciate you guys being here. Um, it can't tell you when the USD as the world's reserve currency will expire. Can't tell you what the next thing is going to be. But the thing is, I think we all could be in agreement that we are on the path. And with what the Fed is doing, what the government is doing, they are speeding up the process for the world to finally say we don't want any more U.S. dollars. And so the question is, what will it be? And you may not want to be having too many U.S. dollars at that point, but you may want to be having more of a store of value to get you from here to there. So it's just something to consider, something to keep in mind. Contact us, sales@silverbullion.com.sg if you have any questions, concerns, or if you need to or would like to know what we can do for you. And, as always, try and be a blessing, more so than the burden, because you can see already things are coming down the road, and there are going to be opportunities, and there are also going to be people that, didn't take the warning. The warning's been coming for years. Maybe they didn't listen to it, didn't understand it. We're going to have to help them. For new guys who are looking at, what is all this talk about gold and silver? Why do people want gold and silver? Just go ahead and look at the comments. They'll tell you why, people move into gold and silver, again, because it is a store of wealth. So then we'll just have to see where things go. So try and be a blessing and not a burden. And everybody pretty much can see what's humming. So saddle up. Got to saddle up. Saddle up for what's coming ahead, and silver up as well. And I'll see you guys next week. Appreciate you being here.